The financial crisis part 2 is upon us. Today we will discuss the conditions that we are facing today being similar or even worse to that of 2008-2009, the financial crisis. That's why I call this the financial crisis part 2, because we are circling back into it. Let's begin as we talk about the number of troubled companies nearing its 2009 peak. Financially strapped companies' ranks are swelling. A Moody's investor service tally of the latest creditworthy companies rose by 10 to 274 this month. That's the least creditworthy companies. Pushing it to 2009, April 2009's record of 291. Remember, March 2009 is when it hit 666 on the S&P, the lowest point. We're now back at that number. The list comprises companies rated at least 6 notches into the junk territory with a negative outlook, which should suggest a further downgrade coming soon. So what does that tell you about the state of the economy? You don't need to be a genius. You don't need to have a PhD. Look at the basic facts. The uptrend is a sign that while the U.S. high yield default remains below its long-term average, more corporate borrowers are finding themselves on shaky financial ground. How many companies have you heard of that are concerned about the future? That's why they're not hiring new people. That's why there's a standstill, a freeze in hiring at this time in many corporations. In fact, many have laid off, and not just in the oil and gas industries as well. The U.S. economy is growing, but at a muted pace. That's a lie. And choppy credit markets are limiting financing for companies perceived as risky. And as the collapse in prices of oil, gas, and coal and other commodities as energy and mining companies on the ropes. That's for sure, but it's also extending out into the greater economy as well. If I move down the page, by the way, this article is out of the Wall Street Journal. The U.S. economy is growing, but at a muted pace. I already read that part. Unsurprisingly, the energy sector drove the latest uptick in the Moody's list. Oil and gas companies account for 31% of the latest tally. Obviously making a big dent in this at this time, but as I've said, it's not just them. Let's move on right here. But then you have this great divide which is occurring. You have these people getting laid off. All sorts of people are in a bad situation at this time. But simultaneously, you have the rich becoming even more rich. The global super rich continued to splash out on super yachts and luxury goods last year despite a decline in their overall wealth in the wake of the financial market turmoil. That's because the people at the higher end, let's say the upper middle class, they're becoming middle class and they're coming down the ranks as well. But you have those who are the rich people, those who they deem the number of ultra rich people with $30 million or more in assets, which really I wouldn't consider ultra rich, fell 3% last year. There are now 187,000 with assets in excess of that benchmark, down from 193,000. All I'm saying is that the people who have 30 million aren't necessarily that rich, and they're becoming more into the middle class. The middle class is becoming part of the lower class. This is just the way it's happening right now, and it happens with many nations. In fact, you can go around and see how this is. Wherever you have prosperity, you generally have a strong middle class, and then you look at some of these developing nations and they don't have a middle class. This is very, very obvious. So that's all I'll say for this video. It's a very short one. If you found it informative, of course, please give me a thumbs up. Just to say, of the other videos, the Q&As, I'm going to intersperse them now as I answer the questions from that particular video. I'm going to be posting at intervals. I don't want to post them all just one after the other. I'm going to, let's say, do it every other video. I'll have it posted. I already have an hour of answering questions, and I haven't even finished recording yet. So we're looking at a very long set of videos here for this. That's why I want to sort of spread it out, because I want to get the viewership up on that as well. So that's all I'll say for this. If you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you want to look through the book, just head over to Amazon. They have a look inside feature, which will allow you to flip through the pages of the book and see if you like it. If you're still here, I just want to thank each and every one of you for commenting and asking me those questions for that video, for the Q&A there. Really do appreciate that very much. I know that I have such great solid fans and subscribers here on the channel, and I try to always get back to you guys. I hope you do see that. It's very difficult to do so because I receive literally hundreds and hundreds every single day. Actually, it must be more than hundreds, but regardless, the videos are obviously being uploaded practically every day, and the comments are just coming and coming. So I try to get to as many as possible because I want to respect you, because I know that you respect my information here. That's all. Take care.